Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief Recap. Had a really cool session today in the Daily Brief with Colin, our resident crypto guru, aka phys ed teacher. Actually, we have got some fun projects on the go with crypto. I think we're going to try and do like a top 100 ICO names from 2015 to 2017. What did they say they were going to do? And what's happened since? Might be a fun report for us to put together to maybe do some karmic work in the universe. So anyway, be sure to look forward for that over the next few months out of TRI, and hopefully Colin, we can have him as sort of the lead producer on that. But we had some fun sort of going through the names, and on balance, I think crypto. We're in this little air pocket here. We've got about a week or two to go until the sort of pre-halvening pump window is done. And then I think we ought to cool our jets. But in the crypto space right now, the wind is definitely at the market's back. So what we're finding is little names that can put in W's and have some half-decent volume pouring in and have a half-decent sort of user case scenario that actually justifies the coin's existence. They seem to be doing really well in here. So, for the purposes of your conversation here, of course, I like to concentrate on just a nice, simple overview of the market. If you want that more detailed stuff, of course, maybe come on in and think about joining the site. So, our overview today. It is Friday. It is the big options expiry event for April. I repeatedly said over the past month or so, well, let's say past week or two, that it seemed to me that the Wall Street boys had a big incentive to get the stock market up into that options expiry, and gee whiz, that's exactly what they've done. Which is really interesting because when we get to sort of risk on kind of proxies, some real funny business in the markets overnight. And as a result, we saw some really wild price action and very suspicious. Like something just does not smell right about all this. But welcome to 21st century capitalism, where even the people that we trust who are in power are probably totally gaming us. But anyway, it is what it is. Always a good idea to start with our conversation with what the heck's the US dollar index doing. As we've pointed out of late, it feels as though we are coiling and getting tighter and tighter and tighter within a trading range, which means ultimately at some point down the road in the not too distant future, we should see some follow through either one way or the other. We had talked about this original fractal bottom, and it looks like they left a little bit of a gap here. Yep, you can see the gap right there, basically off the fractal level. So if we are going to dump on the US dollar index, which in essence should mean that the global economy is feeling better, people are willing to put money to risk in the broader market. We should see probably AB equals CD take us down into the original fractal bottom against the megaphone level and fill in this gap. If, however, stock markets roll over, fear assets all start going crazy, there's more talk of further coronavirus illness and political division, blah, 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 we could very easily see the US dollar index resolve this range higher, which, interestingly enough, would take us up into the original fractal top, and there's a big juicy gap sitting right up in that L level. And, of course, the top of our megaphone is up here. And you could probably imagine that we could start thinking about reload short and long zones. And what a surprise, 61.8 to 78.6 actually takes us up into a reload zone. And interestingly enough, this actually might carve out quite a powerful harmonic pattern here, which would, if we did rally up here, it means some sort of short-term chaos. But if we did actually rally up top here and then failed up top here, that would actually set up a pretty powerful harmonic that might take us down, and sort of the world economy's recovering, yada, 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 for quite some time down the road. So long and short of it, right at present, we're still coiling. We're asking which way we want to resolve this crisis situation. And I hate to say it, but for the time being, the jury is out. If we look at risk on, risk off, like I said, lots of shenanigans going on in these markets. I do understand, and we've been talking about this recently, that the front contract month in the crude oil was very, very low. And it almost seemed to me that somebody wanted this thing to go out at around 20 bucks. And basically, as soon as the rollover on a lot of these CFD sites and stuff, and this is the spot contract month on TradingView here for the NYMEX, as soon as that rollover happened, the June contract sitting up here at about 25 bucks right now. And interestingly enough, this is a really good analogy that often when you see these kind of situations, it actually sets up a pretty easy no-brainer trade. So the rollover happened, and this is the crude oil chart from last night. What I find fascinating about this, we sort of walked you through this, the war zone, and one hell of a war it was. In fact, I might even argue that there was no victor or victim through the war zone. It was just sort of, we've taken it down to a level, let's just park it. Here is the rollover, and fascinating with this is if we just draw some very simple fibs, the irony of all of this is that basically all this does is just take us right back up into a shorting window. I mean, it's almost cliche, really, after a while. And what a surprise, into that shorting window, right overnight, everybody's sort of in shock. We got head and shoulders, we got AB equals CDs, and you can see how, and also too fascinating, look how this counter trend rally just came right back to that double top fail level, and they took it down further. So the irony of it all is that this gapping higher for the oil price is going to print, oh yeah, gold oil just now is $26 when it was $20 yesterday. But actually all it did was it prevented any kind of rally, because the irony of it all is you could actually have justified a 2 or 3 year bull market just on price working its way up. But bang, no bull market for you. And now we start the bear again. And my hunch is gaps like to be filled. Maybe a curious feedback for the YouTube video. What's the statistical percentage of gaps liking to be filled in? I don't know whether you guys even watching the YouTube videos understand. It is a very, very high percentage of the time. Now, of course, nothing ever moves in a straight line. We're probably going to get reload zone counter trend rallies on this thing at some point. It'll be a new shorting window, blah, blah, blah. But my hunch is we're probably going to spend the next 6-8 months working our way right back down to fill in this gap. So, very suspicious, right? Almost felt like it was a manufactured move there. Very, very suspicious. And interestingly enough, all of the stock indexes, they all gapped higher too. And what was interesting was that the news that they justified the gapping higher was that this one U.S. drug manufacturer came out with a product, or well, they have a product that people in the Chicago area are using to try and treat this COVID virus. It doesn't really have that much data. I think it's like 100, 200 people they've used it on. And they didn't compare it to a placebo. A bunch of people that were in this study actually did die. So there's real questions as to whether this drug even is of any value at all. But the overnight news was, oh, the Americans have found a cure, blah, blah, blah. And everything's gapping higher. But I got a funny feeling this is, it stinks. It stinks like yesterday's cheese. Something, and I have talked to you guys recently about how things like AB equals CD levels, we're going to take this market higher. How is that going to look? We also talked to you guys about, heads and shoulders' patterns. Where are those objectives? We had gaps to the upside. How do they justify taking the market higher? And the worst part about this is for retail Joe six-pack, this is the futures market, but the worst part about it for Joe six-pack is like if we look at something like the S&P depository receipts, notice that they basically opened it right at the day highs here. So, I mean, you're frozen out. You can't even really trade this, right? Where's this move here that I could make some money on? No, sorry. It just opened right up here, and ironically enough, anybody who wanted to just buy it on the open, they're still underwater here today, even though the damn index is up 1.9% on the day. So, like I said, things are very, very stinky in the market right now. And, let's call a spade a spade. You look at a chart like this, I mean, look at all the holes. This is ridiculous. At some point, all of these holes are going to be filled in. And that's basically what this process is, of filling in all these holes. In Europe right now, I don't know whether you're aware, but in Europe right now, they actually have a short selling ban. It's illegal to sell stock short. I mean, talk about engineering a rise-only market condition. I mean, it's almost cliche the way that the 1% finesse this thing. But anyway, point of the matter here is that just as all of these gaps, they're taking the process to fill all this crap in. My hunch is at some point down the road, we're going to have to fill in all these gaps. And historically, very rarely do markets V bottom like this, and that's sustainable over time. So, what I actually think is going on here is they're engineering the spring rally so that, the 1% can go sell in May and walk away, blah, blah, blah. So I am looking for that seasonal top here in that May period. And then, of course, we know that there's a big, ugly pivot. And it's also usually a seasonal pivot, too, right around the end of June, beginning of July. So, could we sort of yawn our way through this? Wouldn't surprise me one bit. So, just be aware of that. This isn't natural. It's not healthy. Just like this wasn't natural and it's not healthy. And we're going to be doing a lot of backfilling here over the next little while, people. All right, so our commentary about risk on, very suspicious, very stinky, very 1%-y, freeze the public out. They can't do anything. And then, of course, I talked to you guys lots about options expiry. Today is an options expiry day today. So anybody who bought puts through all of this, an April put, I'm going to protect my butt, rally the market up, so all those puts expire worthless. Not a surprise one bit. Also, too, our comments about the oil. In essence, they've negated the potential for a nice seasonal rally here and a bull market. We're basically right back up against the old highs. I'm starting to get worried that we're in the process now of finding that top. And, of course, as they blast stocks, especially with a gap and stuff, we're probably going to start creating momentum divergences, and we now need to start looking for that rollover process. Oh boy, what a mouthful. I thought it was really interesting. Our crazy little bond trade just keeps working away here. It's not really breaking out to the upside, almost a spinning top here today. But, the bottom line here is, if you are a trader, traders got to trade. This is the same conversation. Nothing's really changed here. I thought it was interesting, and I did see some people on the Broiler Chicken Show even mention this and say, well, Brian, I'm trading circles around you right now because it turns out that actually there was a cute little double bottom. And somebody even on the TRI site said this. Well, Brian, I'm trading circles around you right now because I went and bought this double bottom and I took profits. I don't know whether he said he took profits at 50%. But you can see that's basically a 2-to-1. So I don't know the exact numbers. Maybe he shot for Mountain Man, but it was just kind of funny on the site to see, and I did see other people also make reference to this, that there were actually cute little trades that developed even inside my bigger trade. So go figure. Anyway, point of the matter here is if you did take this bigger formation, there's really nothing to do here still. Just a big hurry up and do nothing. Anyway. Gold still, or excuse me, bond still hanging in here. Gotta say, gold, and, again, kind of that something doesn't smell right about what they were doing in that crude oil market overnight. Something didn't smell right. Now crude oil is basically 30% higher. So, we talked a little bit about this potential empire top coming in. We also, and it was really interesting to watch the battle in here because I think they really did want to try and take the market higher here. You can see the wick up here. They rallied it up into the gap, and then the people that were sort of frozen in here, they took advantage of that opportunity and slammed it down. Also, there's a really, in fact, I was exceedingly pleased with what I saw yesterday. In that, my business partner here, there's three of us, Julian, Seward, and myself. And Julian's a relatively young guy, incredibly smart. He was like basically built, very engineer, very, very smart gentleman. Came to me about 4 or 5 years ago, very sort of, I really want to learn how to trade. I want to know what a trader's life is. And it took me a very long time to really convey the message of what a trader's life is to Julian. I think he gets it now. I'm very impressed with his education. If anything, he's a great analogy. Some of you, it might take a good 5 years of continually banging away. Bang, 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 bang. And just running into hurdles and eventually getting to the point where you understand the significance and importance of journaling and self-assessment and logging and tracking everything you do. Is it behavior? Is it your setup? Blah, 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 blah. But I think Julian's there. I think he made it. Way to go, Julian. And yesterday's daily brief, because Thursdays he comes on the call, yesterday's daily brief was a really, really good tell. Because a lot of sort of new people to trading, they might take this breakout and they'll be like, okay, rock and roll, we're kicking ass, everything's rocking, I'm making tons of money. And then all of a sudden things start to slip. And it's almost like you just bury your head in the sand. As a broker, I used to see this all the time. And, even through this rally, okay, I'm kicking ass. And then things started to roll over and started to break down. And really the sign of a professional is, the conditions are not right. I don't feel good about this. Get me the fuck out. And he did that. And I'm very proud of him for that. Excellent. Just shows, he lost money on his trade. The public, if the public saw that, they would be, why would I buy your newsletter? You suck. You're a loser, right? You lose money. But I look at that and I say, that is the sign of a professional. This guy took like a $20,000, $30,000 stake and ran it up to 100 G's. So you have to give back 5 G's just to make sure he doesn't get absolutely destroyed when something like this happens? Okay, shit happens. No big deal. Trade it, don't date it. That's exactly what he did. I can't say how impressed I am with Julian with his professionalism. Hats off. That empire now, it looks like it has fired and confirmed, and today we're getting follow through here. You could even argue that actually the empire confirmed yesterday. Considering what they're doing with the oil, and you've heard me talk about how oil and gold often move in opposites, if we see that oil is going to print a huge up day, actually it shouldn't surprise us to see that gold has to come off here. It's a tough, hard lesson to learn. Took me a very, very long time to respect it, but usually gold and oil can't move the same direction on the same sort of trajectory at the same time. Little signs of failure up top here. It's fascinating how we've come right back down to this, basically this neckline of this massive formation. Clearly, if we lose this level, and really that's a question about whether we lose these lows. If we do, look left, right? We're probably heading down into here. And then remember our 50% rule study from the other day. I think there's probably pretty good odds if we can't hold this breakout level that we're probably heading down here. And, keep in mind, so that's a good $70 an ounce. So be careful here, everyone. if you are a sharp trader and maybe you want to drill down to like lower time frames, and we are at a level here that the market is interested in. So maybe at this point start, we've got na levels down in here. So at this point we start pulling up our indicators and looking for divergence and start hunting W's, and if they start coming in, then away we go. But for now, the fact that we just made a new low here on this hourly candle means there's no signs of a bottom here yet, but that might be starting to paint that divergence conversation. So that was the fractal top, right? That level right there. That was the gap on the daily chart. Interestingly enough, and I'm kind of wasting time here, sorry. But you can see the counter trend rally. That was nothing more than our buddy Brandon sitting there just hitting that offer. Bang. So, it is what it is. And like I said, what I was super impressed with was Julian's professionalism and saying, hey, this is not going the way I'm expecting. I'm starting to get risk tolerance levels broken. I have to get out. And he got out. So good job, Julian. So a couple things I'll just sort of tie in here for taking us into the end of this video here. Remember we said yesterday, this is a great little proxy on the health of the junior stock market. And what is the health of the market? And I distinctly remember yesterday I'd said, we're at a really important level here. And, as I was doing the video, this was a down red bar. We were right on its lows, and we were kind of like, oh, crap, are we just going to tank here and make new lows? And you can see they stopped the bear, and now actually they've started a counter trend rally. It's remarkable to watch this stuff happen in real time when you're just sort of like, okay, here we are. What are they going to do? What are they going to do? And she turned. It's remarkable. So, if you were, it wouldn't be a bad idea to pull up a study of this and see whether this move to new lows was on a divergence. If that's the case, and this counter trend rally actually confirmed the divergence, then you could actually make the argument, hey, we actually got W's trying to happen here. So now we get to watch this high. If we take out that high, then we actually have some structure that actually suggests that, hey, money's actually coming back into the venture cap part of the market, which means that people are feeling a little more optimistic. Also, too, if we think about stock markets sort of topping out, sell in May and walk away kind of idea, I do, thought I had it on here a second ago, but I do like the idea, I think it was over here, yeah, of this sort of being a rolling top. And interestingly enough, the junior market's just going to be shit in here. As the senior market starts coming back and people are feeling a little bit more comfortable, well, people can start coming and putting money back into venture cap through this kind of period. Then if we start aiming out here, on this kind of event right here, and keep in mind that's like June, so that's literally a month and a half, almost 2 months away. That's when we start going, okay, are we going to M out on these kind of indexes? And that'll be sort of your foretell that, hey, trouble's brewing. Notice you could actually make the argument looking back into the end of the year and then into early February. There were some signs, and this is basically March 5th, that, hey, there's problems here. March 5th. You better be careful. Something doesn't look right here. And so, the only other thing I'll mention here, I think I've told you recently, TRI stepped in on the buy side on this little hut mining. And we got a nice little treat, big pop here this morning. We almost got to a double level. Double level would have been up into this area. So we do have open orders working to sell halves on doubles. It would be a nice inaugurational trade for TRI's corporate account. If anything, the way that I'm interpreting this now is we've got nothing more than a nice little cushion here to sort of buffer our purchases. We still have one more bid down here at 62 cents that they wouldn't fill us on, jerks. And if anything, this is a good analogy of a trader's life. We had little W's that were working in here. If you got doubles off, it came awfully close there. Great. If you were just trading 2-to-1s, then obviously you got your levels hit. I actually have been very, bullish of this company and loading up. So I don't really have a problem just sitting in here doing nothing on my own personal accounts. But as I said, TRI actually, we just got the corporate account going, and we actually went in and stepped in on the buy side. So we're feeling pretty good here today. It's not a bad performance. Having said that, like I said earlier, this isn't woohoo. We can actually toot our own horns. We're so awesome. There's no profit levels that have been hit. There's no taking profit orders being filled. This is just nothing more than it's bought us some wiggle room, which is encouraging. And of course, if you're interested in joining us, now you can start working your bids at gaps. How often do gaps like to get filled in? I think the odds are pretty good. We'll probably come back down and fill in those levels at some point down the road here. Speaking of the corn itself, not really a hell of a lot of change to my thinking here overnight. I think we're still sort of consolidating off the huge dead cat bounce that occurred right at that triangle resolution level. And the question ultimately here is, do we trend continuation trade our way up into, like I said, we had Colin on the call today. And we've been calling, I think just like 3 weeks ago or something like that. I mean, a while ago. Sort of painted that, hey, I'm starting to feel more bullish, and this is my price objective. I think there's a nice liquidity pool up here. It's also Mountain Man, and it's the 3 drives pattern level. I don't see any reason why that can't be hit. The only thing I actually am thinking here is I think actually they want to go after this level way up here. We'll see. Only time will tell. The roadmap that I'm using to sort of what do I think is sort of our course here over the short term, I think it looks something along these lines. This is the old 2016 Happening pre-pump rally. And it was just interesting when I did all the date studies and stuff like that. Basically, the study, I overlaid it on this candle here. And I have to say, it's kind of doing what we're kind of thinking it should do. Obviously, going to be a big battle up against these recent highs, so let's see how that goes. And as I had sort of said, shorter time frame, this had carved out dead cat bounce off of those lows. I'm thinking about trying to trade this formation here over on the casino. That's always an adventure unto itself. But in essence, it looks something along these lines right now. You can see the trend continuation level. It's basically about 7,100 over there on the casino, and if this trade works, looking at about 7,700. So we'll see how this goes. Only time will tell. I haven't pulled the trigger here just yet. If anything, what I kind of wanted to see was I wanted to see a little bit more internal strength. I'm not getting a lot of the internals that I'd like to see to actually say that this thing is a bull. So start showing me some W's on momentum indicators and volume indicators, and actually just show me actual buyers stepping up. And I think I might participate. But I think we're just a little bit early just yet here. So, all right, just finish off this free video for you people. Let's see where we are here. With Colin on the call, we get to go talk altcoins. Looked at a bunch of different names. And, if you are interested in trading these leverage products on these various exchanges, I actually do like the idea of us working up to this original bought objective on this poop coin index. And that's Colin's liquidity pool right up top there. So basically just a rally into these levels and against these lows. I thought this was a really good conversation with you guys, because this is fairly conservative setup that I use to trade futures products. You can see the bought entry level here. We talked about this lots. You just got to sit there and do nothing while the levels are working away. I'd move stop to scratch level hit on this event, and then move stop to trailing level hit on this event, And you can actually see a really well-defined M just came in up top here. So I think that that trade resolved itself on the failure of that mark right there. And that's 552.70. And what I often saw as a futures trader, and I see this in crypto too, I mean, really, these concepts are more trading human behavior and psychology than they have anything to do with the actual product itself. That's sort of a, shh, don't give away the secret. But it turns out that that's the secret. Anyway, point of the matter here is I often see that the market will simply sort of reorganize itself after things like move stop to trailing levels are hit, and then we M out, and then you're basically told to hop off. Then you get another consolidation, and gee whiz, this consolidation's, remember, you sold here, and so now this consolidation to play that original move up top, basically the target levels are almost the same. This consolidation here is going to have you try and sneak in just a little bit lower than where you sold. So, you can see we just made a new low this morning. So a guy like me, I kind of want to see, can we carve out just a nice consolidation to set me up to get me long again. So let's watch what happens here. It should be a really interesting little tutorial for you guys over on YouTube. So let's see what happens. We could very easily just blast straight off here, but the fact that we went to new lows leads me to believe that this low should be tested. Now that we've crossed back above this trend line, I don't know where you want to do it. I thought I was going to do it off of that high. Let's see what we got here. Hey, there we go. Let's go off of that high. And we'll do one up there because that looks like that's the highest high. And then another off of there. Yeah. Okay, so actually this makes even more sense. So I like the idea of the market rallying up against this trend line, then coming back down, doing its carve out 3 higher lows. Let's see if I can get long off of this level right in here to set up a continuation trade up top. So we'll see how this goes. And then finally, kind of for fun, but I'm seeing this a lot lately, guys. Everybody, of course, is absolutely in love with Binance right now. So what I'm seeing is a lot of these Trex coins that basically they've written them off for dead. They're starting to get these pumps. And if anything, here's a great example. What I absolutely love is just something like just show me W's. Whoops. And you want to make it really easy to see them, just change your chart to a line chart. So hopefully you can see, wow, what a consolidation through here. And woohoo, away we go. W's through here. So ironically enough, they say there's always a bull somewhere. What I'm noticing is, and I don't know whether you have access to it or not, this is the whole Trex and U.S. customers and all that kind of craziness. But I am noticing, I mean, if you want to make money from this stuff, and you can, I am noticing a lot of these little Trex only names are starting to get really attractive. So obviously we can't chase this thing. It's just a great illustration of, there are names that are going absolutely apeshit in this kind of market. So just be cognizant, be prepared, be sharp, hunt your setups, look for those. I mean, gee whiz, holy weekly W's down here. Hunt for those weekly W's, and that's the kind of shit. That's the kind of market state that we're in here, people. So get out there and have some fun. All right, I think I'll leave the video at that. As I always say, sure hope you got some value out of that. Gave you some ideas to chew on. And hopefully I've made a positive difference in your day. All the best, and bye for now.